The move by S&P Global Ratings to upwardly adjust its assessment on South Africa's sovereign credit rating had been widely anticipated. Economists have welcomed the adjustment as a positive sign. Chief Operating Officer at Sovereign Africa Ratings, Zwelibanzi Mazia, outlines the factors that contributed to S&P's decision.
Previously, the energy issue, Eskom's load shedding, was a big part of why they downgraded. However, I see in the current report, S&P mentioned that the load shedding is less acute than it was in 2023. However, what we have seen, also considering other reasons that they mentioned, it's a change in the outlook that they had made. So a positive outlook indicates that they are likely to upgrade the rating on the next rating update.
In 2017, South Africa's sovereign credit rating was downgraded to junk status. Director and Chief Economist at Econometrics, Dr. Azar Jamin, explains what the adjustment means for global investor perceptions.
It means that South Africa is still regarded as a relatively high risk environment, but it is, it depends which countries you compare us with. In some cases, our rating is still a lot lower than our peers, but there are cases where our rating is superior to that of our peers. And the moral of the story is that the better your credit rating, whether you still, irrespective of the absolute level of the credit rating, the lower the trend of long-term interest rates ought to be, because there is then a greater willingness on the part of international bondholders to buy South African government debt without demanding a huge premium in terms of a higher interest rate.
The higher ratings action could trigger increased buying of government bonds by institutional investors. This in turn could support the rand. Nosipho Khadebe, SABC News, Johannesburg.